This conference will now be recorded.
Okay, so as you know, accounting is based on the equation assets equal liabilities plus stockholders' equity. Stockholder equity equal common stock plus retained earnings. Retained earnings equals revenues minus expenses minus dividends. And we said the purpose of a business is if you start off with cash of 100 and you get common stock for that, you're supposed to do what? Increase cash and increase the retained earnings. We work with double entry accounting based on this guy, Pacioli, who says in a business transaction, you receive something of value, that's the debit, and you give something of value, that's the credit, and we reflect this in T accounts. The debit is always on the left, and the credit is always on the right. And so going back to our accounting equation, we say the debits, which are on the left, equal the credits on the right for liabilities, the credits for common stocks, the credits for retained earnings, the credits for revenues, and the debits for expenses and dividends. Debits over here are good. Credits on this side are good. So that's why the expenses have debits and they're not good, because that's just like paying your rent. Let's look at an example of buying a car. If you bought the car and just paid cash, you debit auto and credit cash. If you bought it with a note, you debit auto, you got the auto, that's the value, you gave up a note. And in the final situation, you bought the auto paying $2,000 down. You still received something of value, the auto $10,000, but you gave up cash for $2,000 and a note of $8,000. So that's fundamentally how we start accounting. And so what you all are going to be demonstrating with that problem is this accounting cycle. You're going to analyze the transaction. You're going to make the journal entries. You're going to post to the ledger. You're going to prepare the trial balances. Any adjusting entries would be already included in step 2. Then you're going to, with a trial balance, you're going to prepare the financial statements. Then you're going to close the accounts. We won't worry about the post-closing trial balance. But these other 8 you're dealing with, and the adjusting entries 5 and 6 are folded into 4. So that's what you're going to be demonstrating. And we said in making journal entries, on the asset side, if the asset increases, it's a debit. If the asset decreases, it's a credit. The normal balance for an asset account is a debit. For a contra asset, it increases with a credit, it decreases with a debit, and its normal balance is a credit. For liabilities, they increase with a credit. It goes the opposite way. They decrease with a debit. A liability is supposed to have a credit balance. Common stock, same thing. It increases with a credit. It decreases with a debit. The normal balance is a credit. Retained earnings, it increases with a credit. It decreases with a debit. If the company is doing well, it has a credit balance. If it's not, it has a debit balance. Revenues, basically, we're going to have credit journal entries for expenses and dividends debit. So we're just kind of recording how the accounts operate in the journal entries. And then I created for you 20 journal entries for Principles 1. And with those journal entries, I told you what the debit and what the credit. So we had a cash transaction, cash coming in. Cash is always debited. That's what you receive the value. And this showed the credits. So when you have cash coming in, you got to find 1 through 6. If cash is going out, it's 7 through 11. So here, cash is always credited. Then you debit the asset purchased, the liability paid, the expense paid, the dividends, all the item refunded. Then we get into asset transaction other than cash. Purchasing an asset utilizing debt, debit asset purchase, credit liability created. An adjusting entry, utilization of an asset with a transfer to expense of the adjusting entry. Supplies, recording of depreciation, sales on account. So these are asset transactions that do not involve cash. Transfer of inventory to cost of goods sold upon the sale of an inventory. Bad debt expense. Write-off of uncollectible accounts. So all of these journal entries are here. And remember, you simply had to pick the journal entry and you were told what the debit or credit. Liability transactions other than cash, accrual of an expense, which is an adjusting entry, completion of the earning process for unearned income. So that's an adjusting entry. So when you have those transactions that you have, whether it's the continuing students for those 12 or 13 easy journal entries you got, you pick out the type, and then you use this as a guide to make the journal entry. Same thing for the new students when they get ready to make their journal entries. They're simply going to be using this chart to aid them in making journal entries. When we make journal entries, we need 2 accounts at least. This is the chart of accounts with the normal balance that account is supposed to have at the end of the day. And these are the accounts that you utilize. So you don't create any new accounts, new students. I got the accounts that you're going to use in those journal entries. And well, just to see how y'all coming, why don't y'all make these journal entries here for me? Because you got to be able to make the journal entries. You think y'all can make these journal entries for me? So take out a sheet of paper.
No.
The 10?
Say
Like
what?
now?
Yeah,
Like
right
now?
Right now. You see what y'all
1 through
remember.
10?
Say what?
1 through 10?
1 to 10, yeah. I've been talking and y'all been listening. So I'm gonna see what y'all remember and see what the new students remember too. So how much
Give me a
time you
second.
got for a journal entry? Since it's principles 2, a minute each.
Let me down.
All right, a minute and a half or so. See if you can make these journal entries.
Hold on, I'm looking for it.
I'll give you about 15 minutes. Does that sound like enough time?
Hey, Professor Boyd. So revenue and sales are interchangeable, correct?
Yo, Terrell, is is number 3 type 3?
Number three, you said?
Yeah.
I don't know. It's either 3 or 15. And the reason I said it is because it's from corporate customers, which means they're paying with credit, not with cash.
Right.
So, I don't know. I can't answer that. I don't think so though, because he said a type 3 is going to follow after a type 13. No.
Oh,
Well, yeah, I don't think so. I think it's a 15, but I'm not sure.
because I got a question on that one and number 4 because it's just saying a receipt of short-term working capital.
Finish.
No, we
No,
ain't finished, Dr. Boyd.
Oh,
Dr. Boyd, what do you mean receipt of short-term working capital loan?
You went to the bank. It's y'all problem here, isn't it? Yeah.
Yeah.
You just went to the bank and borrowed some and got a short-term loan for the business.
Oh, okay.
wait, I'm doing the wrong one.
So what you do is you go back up here and figure out the type. Have y'all
Wait a
forgot
minute.
that?
Honestly, I'm doing the wrong one.
I got it right here on the screen. Why are you doing the wrong one?
Is that the same transaction analysis you gave us last semester?
Same one.
Oh, okay.
I already got it.
How
Hey,
many new
Professor Boyd.
students coming on making these journal entries?
Oh,
I'm managing.
Professor Boyd.
Yes.
I
Didn't
have
you,
a question.
didn't you say that a type 2 always follows by a type 2 is always going to be followed behind a type 12, was it?
Yeah. I kind of kept them in order, but your 14 is down here. So it's there. Don't worry about that.
You know, do you understand what I'm saying? I'm talking about number 3 specifically.
And I'm saying it's down here. It's there. They're just not in order.
Oh, so that is going to be a type 2 then. Okay.
Yeah, they're gonna come up eventually.
okay. Okay.
Professor Boyd.
Yes.
This is Kiara Ghostin. I've done the journal entries, but I was just trying to see if you saw my email about me having to go to work. Like, it was okay if I left at 5:20. I have to be at work by 5:45.
Well, I
But
hadn't had a chance to do my emails. You know, this is a day where I teach all day long.
oh, okay.
Is that going to be a continuing thing?
Well, it's gonna be up to my other classes. Like, one of my professors ran late today, so like I missed my actual shift due to that class, so I have to come in the second shift. But this is not my normal shift. It's like a today thing to make up for this morning. So no, it won't be.
Say that again. I'm not understanding what you're saying.
I'm saying, like, okay, so I work a shift that starts in the morning, but I missed that due to another professor, like, class going late. So I should have been at work this morning, and I wouldn't have had to work right now. But because I missed my shift, I have to go to second shift. So this is just for today. Like, I'm making up for this morning. I won't
Okay.
have this shift every day.
Okay.
Okay,
That's all I
thank
ask.
you.
Okay.
Oh, and I don't think you marked me as a continuing student still, but I'm about to go, though.
Kiara Ghostin?
Yes.
Donna,
Okay, thank you.
you're welcome.
Professor Boyd, when you say you put it in order, do you mean like from 1 through 10, you put the types in order?
Ignore that. Just make
Okay.
my journal entries. How are we coming?
I'm on 9.
Okay.
Professor Boyd, I'm just now getting back in. My computer had to switch laptop. So we're just doing these journal entries. That's all. Did I miss anything else?
I'm not sure when you went out.
It's been about 10 minutes. I couldn't get back into
Oh,
what is
we're just doing the journal entries. So we haven't been doing anything except
okay.
individuals working on the journal entries.
Okay.
Does number 10 have 3?
Make a decision.
What?
Make a decision. And I'm going to see who got the most right. We have a prize for the person who gets the most right.
If it ain't a grade of a, I know your prize will tend to be a congratulations.
High five virtually.
Virtual 5.
Hey, Dr. Boyd, how you doing?
I'm doing fine. How you doing?
Good. I just got on. I'm trying to see what's going on.
We're making these journal entries. Why are you just going and getting on?
No, I mean, I just logged into the class. I see account cash to retain earning. That's the only entry that y'all working on right now.
1 through 10. So why are you just logging in?
Oh, I just looked at my email account and seen the syllabus, what time the class was.
Okay. Well, you did get here. You know, you got a lot of folks who not here, so but we have to move
Yeah.
on.
Dividends.
So what I need a journal entry sheet.
Yeah, yes, you should have one there. You know, which is that's everybody. You should have them, and you've got
Yeah.
what was submitted in black. But we're just making some journal entries. Are we ready to review yet?
Yeah, we can review.
No, give me like 30 seconds.
Hey, bro, drop your number in the text box so we can
That's
add
what
this.
I'm trying to think, Ashley, how we even do this. Yeah, it's okay.
Talking to me,
Huh?
Terrell?
If you haven't dropped it in the text box, y'all continuous and new students, drop it so we can add this in the group me.
Uh, I forgot 4 of them though.
You forgot 4 of them.
Yeah.
All right, Dr. Boyd.
We ready now?
Yeah, I think.
Did everybody get the first one right?
It should.
Invested 100,000 to start the business. Debit, cash, credit, common stock. If you missed that, what am I supposed to do? When you start the business, that's
Something with
always
the
the first thing you do. You're going to debit, cash, and credit, common stock.
Wait, say it again.
Debit, cash, credit, common stock.
Oh, I got it right.
That's the first entry you make starting a business. You got to put cash in the you got to put cash in the bank. You can't start a business just say you're starting a business. So that's kind of required. You got to open a bank account, push cash in it, and that's no longer your cash. It belongs to the company. So you debit, cash, credit, common stock. Cash received for car own revenue. It's a good transaction. Debit, cash, credit, sales, or car own revenue. Love getting cash. So we debit, cash, and credit sales. 3 was collection of cash on account from corporate customers. Debit, cash, credit account receivable. Because you've done the work, now you're collecting the cash. And you see the types that are coming up. Receipt of a short-term working capital loan.
Type
Debit
5.
cash, credit short-term note payable. Then you purchase supplies paying cash. Debit supplies, credit cash. So the first four, cash came in and you debit the cash. Now we're going to have four that come where you pay cash out and you're going to credit cash. We paid on accounts payable 5,000. We're going to debit account payable, credit cash. The next one, we paid rent expense of 3,000. We're going to debit rent expense, credit cash. Then we paid dividends of 2,000. Dividends, credit cash. Then we have transactions that did not involve cash. Purchase supplies on account 8,000. Now, when you pay cash for the supplies, you debit the cash and credit the supplies. But now you buy them on account, so you're debiting cash, crediting accounts payable. And finally, car loan revenue earned from corporate customers, 30,000. You debit account receivable, credit sales. So those were the 10 transactions. How many people got them all right?
Where was the oh
So what?
yeah, now, right?
I'm just saying how many people got them all right.
I miss three. Me.
See,
I got them all right.
Who got them all right?
I did.
Nate.
Joanna did.
You all the captains then, since y'all got them all right, y'all should get full through the other materials.
No doubt
So that's the reward for getting them all right.
No, you know what? I got all 10 wrong. My bad.
Congratulations.
So the starting point in accounting is making journal entries. If you can't make journal entries, it's hard. Next, we post to the ledger. So if it's an asset in the journal, it's a debit in the journal, it's going to be a debit in the ledger and vice versa. So we're dealing with cash, we debit cash, then we've gone over here and credited common stock. So the ledger is just mechanical posting of accounts, but you need the journal entries. Then you prepare a trial balance where you list all the accounts, and this is probably where I want the new students to go to, where they do a certain number of journal entries, post them to the ledger, and then get a trial balance. Now, this is a picture, but we know once we get a trial balance, if we want to prepare an income statement, what would we do? We draw a line under retained earnings. Well, we have time. Prepare me an income statement now. So you got this trial balance. Working with this trial balance, I want you to prepare an income statement, a statement of retained earnings, and a balance sheet. So working with this simple problem here, prepare me an income statement.
Wait, hold on. Because if this is already a trial balance. Oh, so you want to? Okay, never mind. Never mind.
Okay, so let's look at this spreadsheet here. And I just put the trial balance here. Okay, so if we want to do an income statement, what would we do?
Line of retained earnings, under retained earnings.
Not retained earnings for what?
Because that's the only thing we're gonna be working with.
We're gonna put it on the dividends. Everything on the dividend goes on the income statement. So we're gonna take the sales and put that here, and that was how much? 900.
Okay.
Then the salaries were what? 100. And I
Yeah.
put that operating expense and supplies, 35. And depreciation, was 15. So if I add these three numbers together, how much do I get? That's total expense. This 150.
150.
So what's our net income?
750.
That y'all was struggling with some. So if you got a trial balance, you simply draw a line on the dividends. Every account below dividends goes on the income statement. It says our beginning retained earnings was what? 100, right? As we do the statement of retained earnings. The net income, what? 750. So there would be no dividends. So the end retained earnings would be how much? 850. Now, can y'all do a balance sheet?
Yeah, child. Yeah.
Say what?
The balance sheet is directly from above, right? It's just information from.
Well, do it then.
That was a question, not a statement.
Balance sheet is gonna be from retained earnings up. So you see I got retained earnings in red. Do me a balance sheet. So how much cash you might have?
150.
150.
150,
How much receivables you might have?
500,
And how much equipment, furniture, whatever this is? 3,000. What are your total assets?
Wait, no. There's 3,000 supplies, not furniture.
He said supplies, huh?
You said furniture. That's why you put it next to furniture.
Whatever one you
I
want.
thought it said supplies.
I thought it was furniture. I put it in supplies. Okay.
Well, I think I might have missed something. Why is accounts receivable 500?
It's supposed to be 50 or 500. It was 500 in the problem. 100, 500. We'll leave 3,000 in supplies. So rather than, let me put the 3,000 here. But if we look at go back, I just copied what's in the original problem, changed around a little bit. I made the cash 150 because they had 50 in deposits. But the bottom line, the total assets is how much?
It's a 3,650.
All right,
36.
do the other side for me now and balance it out.
Huh?
Yeah, what?
Get
You said balance it out?
3,650 here.
Oh, okay.
You got my other side balance yet?
Yeah, it's
I can
balanced.
see this stuff.
You got a long time to balance this. We're almost out of time. We got to do some closing entries.
Early today?
Got to get balance it.
Put 100 on.
Please go down, please.
300 for the accounts payable. And we had the long-term debt, which is what? 2,500.
2,500.
And what else we need?
We missed this. Oh, the cost
I'm
of goods.
Common stock, did we?
Huh?
We didn't have any common stocks. What else we need?
definitely missing something.
What side are we on? I can't see the.
Oh, you can't see it.
Wait, I might have zoomed in too deep. Oh, okay, okay.
So we're on this side over here.
Oh, okay.
Always
We
let me
missed
know
this.
if you got problems seeing it.
Yeah, I think I zoomed in. I pressed the zoom button too fast, so I zoomed into the wrong part.
We're missing 450 somewhere.
You're missing what?
450. Oh, wait.
Wait a minute.
I tell you, the accounts payable is 300, okay? I combine credit card payable and accounts payable and got 300 for that. So I put that 300 in for you. Then I got the long-term debt.
Oh, so do we need to add the total liabilities is going to be the 150? That 150 from the no.
Where you getting 150 from?
I was looking at the depreciation expenses, the expenses from the income statement.
Don't you need any of that?
Yeah, I know. I was no. Can you scroll up a little bit more?
So
Hey,
we said
you
It will
can
be
accounts
retain.
accounts
payable was
payable.
what, 300? You
Yeah.
put 300 here.
Do we need retained earnings?
Yeah, I think you might. And the long-term debt was 2,500. But you need what?
What, the stockholders' equity?
You need that new retained earning.
I was about to say, don't we need to retain earnings?
Yeah, the new one, which is what? 850. I said you need it. Does that give you 3650?
Yeah.
So once you have a trial balance, you're able to go from that trial balance, pull out the numbers below dividend, sales on down, and get an income statement. Then the ending retained earnings that is going to go on that balance sheet, beginning plus net income, we didn't have any dividends, 850. Then you pick up these other items plus the new retained earnings, not the old one, but the new one from here. So this one comes down and you had a balance sheet. Any question?
Can you scroll up above the income statement and like the steps we did before the income statement and not scroll up. What was the step we did right before all of this?
There was no step.
About
We
the
just
journal?
had a trial balance. And I told you, if this was the trial balance, do me an income statement, a statement of retained earnings, and a balance sheet. There wasn't any prior step. I gave you a trial balance so you do those statements, and they fall right out. So if you got a trial balance, does everyone see the income statement? Everything below dividends on the income statement. Does everyone see that?
Mhm.
That's all it takes to make an income statement. Then the statement of retained earnings beginning, that 100 plus the net income, 750, less dividends, we had no dividend, so the ending retained earnings is 850. When we get ready to do the balance sheet, we look at items, retained earnings up, and I got retained earnings red. Say you aren't going to use this one, but you're going to use the new one. So cash, receivables, and supplies, those are the assets. Then on the liability side, long-term debt, accounts payable, and the new retained earnings of 850 gives you the balance sheet. So this is why we focus on journal entry so much. If you got the journal entry, account, post it to the ledger, do a trial balance. Do that trial balance in this order: assets, liabilities, retained earnings, stockholders' equity, dividends, revenues, and expenses. So you do the retained earnings in that order, then you can drop those things over here to get those statements done automatically. Any questions? And remember now, we're reviewing Principles 1 because Principles 2 assumes you can do this. You're doing it for a manufacturing company, so you got more accounts. So we did the review to get you on task.
Professor Boyd.
Yes, sir.
I have a meeting I have to log into for 6 o'clock. Are you going to go over closing entries as well?
Well, let's make the closing entry right quick before you log in. In the first closing entry, what we're going to do? We're going to debit sales. And we're going to credit income summary. So in closing entry 1, we're closing out the revenue. So that's 900. 900. We got closing entry 1 done. Closing entry 2, we're going to do what? Debit income summary for how much? I'm gonna say $150, maybe. Why did I say that? We're gonna credit what? All these expenses. So we're gonna credit salaries. So in closing entry 2, we're closing out the expenses. So the salaries were 100. And then we had supplies of 35. And then we had depreciation of what, 15? So I think that equals 150. Then the third closing entry, and the final one we make since we don't have any dividends, we're gonna do what? Debit what? Income summary. We're gonna credit retained earnings. What's the amount gonna be?
850.
I can't hear you.
850.
Incorrect.
That's what it
Anybody
is.
else? Can't hear you.
So it's not 850.
Yeah, we
So
is it the difference between the new and the old one?
I told y'all 3 times. The closing entry 3, the amount is what? Anybody got any kind of memory?
I always forgot about closing entries.
I see you did. It was the net income.
750.
Don't y'all memories?
So it's the difference between the old and the new one, right?
It's the net income. Just remember that way. Don't say it another way. Closing entry 3 is always the net income. Then that net income, when you post it, you already got 100 in the account, it's gonna get it to 850. So you need an entry that will make it 850. Got it? You need an entry that will make it 850. It's not the 850. Got a closing interest. If you had dividends, you would do what? You would debit retained earnings and credit what? Dividends. If you had dividends, that will be closing entry 4.
All right. Appreciate it, Dr. Board, Professor Board. I'll see you on Tuesday.
On Tuesday. Need any help? I'll be in the office hours on
Yes,
Monday.
Okay.
I'll open this classroom up. New students, if you didn't get all these journal entries, most of them right, you might need to be in the office hours on Monday.
Professor Boyd, did you say that they don't have the book in the bookstore, or they do?
They did not. The rep forgot to order the book or something, so they ordered it. It should be there pretty soon, but I put the material, I put all of this material in course content, and it's not here when we finish this material, then I put some more in. Okay, so
Okay.
you won't be without anything.
Okay,
So
thank
You know
you.
if that book is available electronically?
They're supposed to make it available electronically,
I need a
but
hard
no,
copy.
the virus occurred, and they just, like I said, when I checked, students said it, I thought they had it, and they said, well, no, the book rep didn't put the order in, so hopefully it'll be there next week.
Okay, thank you.
Okay.
When are your office? Do you have office hours this week?
Today is Thursday. And
I meant
Nathan,
tomorrow. Yes, sir.
tomorrow I hadn't planned to, but I know I got to send some paperwork in for you.
Okay. Okay.
Is that what you needed it for?
Yes.
Okay, I got
And
the
then
paperwork. What I got to do is scan it, sign it, then scan it. I'll get that in.
yes. Okay. And so then, so are you available tomorrow, or you have class all day tomorrow?
No, I'm available if you need it.
Okay. Yeah, I probably just want to do this again. Not all of it, but like part of it, just to jog my memory. That's all.
So email me tomorrow and anybody else in terms of, will y'all get together and get a time? So if you want, you got to stand the time at 3:30 on Monday. But
Okay.
but I think I put 3:30 in the office hour. So if you need tomorrow, y'all get together, think about a time, then let me know.
Okay, that works.
Or do y'all have a time in mind now?
I don't know. Must be in the afternoon, I guess. I don't know.
But you don't know.
3 o'clock.
All right, 3 o'clock.
Yeah, 3 o'clock works.
Okay.
I'll be on at 3 o'clock tomorrow.
Okay.
And
All
we'll
right.
go through this again and anything else you want to go through. And
Okay,
then the standard time I'll be on Monday, I think it's at 3:30. 3 o'clock or something like that, whatever is on the syllabus for Monday, I'll be in also.
And you're saying you're going to be on virtually?
Yeah. So you
Okay.
just come to the same room.
Okay.
All right, Professor Boyd.
Okay.
Thank y'all again.
Some of you on tomorrow.
Okay.
Bye.
Wait, who's